These come from Dow Jones, and this is essentially getting back to what the SEC wants to know regarding the tweet that Elon Musk sent out last week when he said, look, I'm thinking about taking the company private at $420 a share, funding secured. Well, now, according to Dow Jones, there are three primary questions that the SEC is looking into. The first one being whether or not Elon Musk sent out that tweet about a potential deal in order to hurt short sellers. That gets to the question of intent. Did he send this out, not because there was a deal in place, but in other words, to flush out the shorts, which would, in the eyes of many people who we've had on the air, would amount to market manipulation? Secondary to that, the SEC wants to know what Elon Musk shared with Tesla directors about a potential deal. In other words, what was the previous communications, if any, before he sent out that tweet? And then finally, they are pressing the Tesla board of directors for details on their communications with Elon Musk. Guys, I think this gets back to the main thing that we've been addressing with guests and with others over the last week. What was the intent of Elon Musk when he sent out that tweet? Was it, as he says, communicating with all of the shareholders what he believed to be was essentially a done deal with the Saudi sovereign fund, and that's why he wrote funding secured? Or is it because he was trying to flush out the shorts? And again, the question is intent, and that's what the SEC is trying to get an answer to.
Phil, but let's break this thing down, just go through the permutations. On intent and it's actually a very interesting issue. First of all, this is a civil case, not a criminal case. So intent, right, in some ways, I don't want to put it to the side, but something's either factual or it's not factual. And by the way, the bar on a civil case is much, much lower. So this intent thing, by the way, if you're a CEO of a company and you're long, broadly speaking, you want to hurt the shorts.
Sure.
Also, a 20% shareholder, right?
So the question, I mean, I actually have, I don't know. We should go back in history and see. Has there ever been a case where a CEO who ostensibly and clearly was long was out to hurt the shorts? You remember, by the way, when we used to cover the financial crisis back in the day, Dick Fold desperately wanted to hurt the shorts.
Those were the days.
You know, and
but
the
Andrew,
question
it gets
is whether
down,
what he was saying was accurate or not, and that's a factual issue. By the way, if there's a criminal case, that's a different issue. Then you care about intent, you care about mens rea. That's a completely different story.
But Andrew, you also care about it in this case. Is there some email or some text between Elon Musk and a director? And we don't know if there is. But is there some form of communication where Elon Musk says, I have had it with the shorts? You know what? Let's send a little message to them. I'll make it clear that we can get this stock up to 420. That'll flush them out. Do I think that communication exists? Probably not. But that's what they're looking for.
But that's where the facts are going to come into play. If he really was preparing, even thinking about mildly to take this company private, he's going to have a lot more leeway, no? I mean, the bigger issue, I wonder, and you saw the stock down today, is the legal ramifications for the company in terms of legal cases that retail and other institutional investors can bring against this company. And, by the way, just the legal costs of dealing with it, forgetting about whether you win or lose the case.
Correct. That's probably where it's going to be far more costly than whether or not the SEC ultimately slaps some type of a fine on Elon Musk or on Tesla as a whole. But I think you're right that the facts are really the key here in terms of funding secured. Now, he put out that blog post, Monday, saying, look, I had these meetings with the Saudi sovereign fund, with the managing director. It was my understanding, and I'm paraphrasing here, it's my understanding that we essentially were going to have no problem getting a deal done, and therefore, that's why I felt funding was secured. But clearly, the SEC, they want to have a more in-depth look here at exactly what was agreed to and what was the communication between him and the board of directors.
Dennis and I covered many a merger, and we know a deal is not a deal until the pen is on the paper, and you don't write it unless it's done, especially if you're in that position.
Yeah, or tweet it, I guess.
I think that's a very fair point. Jeff, your view?
I couldn't agree more.
I mean, you've been digging into this.
Look, there's an army of lawyers and bankers and everyone is running. It's a circus.
And with a potential SEC investigation, what does that do to any process of taking the company private and making it look like they're taking the company private?
To me, the more complicated thing is if you're running the SEC today and you're actually trying to figure, assuming you don't think there's a criminal case here, do you want to make an example of him, and what's the cost of making an example of him? Meaning, are you going to upset the possibility the company does go private? Does it put the company in jeopardy? Does it put the employee? I mean, this is when it becomes as much a justice story as it does a political economic story.